Can Bitcoin break out above 30,000 or so? Sure, it could, but probabilities, my friends. All right, probabilities are what we want to follow here. And again, that is the key here with Bitcoin. And Bitcoin right now doesn't mean it can't break out. It might, but the probabilities still say tons of resistance in this range. Let's keep.
In this recent video, financial analyst and trader Gareth Soloway shared his chart setup for Bitcoin and explained the potential for the cryptocurrency's next big move. Soloway believes that Bitcoin's explosive growth could trigger a similar boom in the stock market. However, he remains cautious about the bull market's return in Bitcoin and favors a bearish outlook until the cryptocurrency surpasses the $30,000 mark. Soloway noted that Bitcoin's value typically rises with risk-on sentiment, but recent banking crises have actually benefited the currency through risk-off sentiment. While Bitcoin's current price is nearing its 2021 bull market lows, Soloway believes that the market could see prices rise from $35,000 to $40,000 if Bitcoin maintains its position above $30,000 for a week or more. Despite recent gains in the cryptocurrency market, Soloway warns that these advances may be short-lived as the stock market sell-off continues to exert a negative influence. In conclusion, Soloway's insights suggest that investors should exercise caution and carefully monitor market trends before making any investment decisions. Soloway concerned that we're coming into a period in the equity markets where I think you're going to get a realization there's a recession. You're going to get this sell-off in the stock market. My guess is it bleeds into crypto, and it creates more selling in crypto to the downside. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
And guys, continues to hammer on this upper level. I'm going to tell you this. You now have 3 days left. 3 days left to break out. If you don't break out in the next 3 days, you should see a big sell-off next week. So ticking, 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 tick-tock, 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 right? We're looking at a scenario here by the fact that we're seeing Bitcoin has struggled here. Even when the U.S. stock market was ripping higher, we saw the dollar collapsing yesterday, breaking a key trend line. Bitcoin's not breaking out here. What's going on? Well, needless to say, it's at a pivotal level. Literally for the last month, I've been saying, guys, watch the 28,500 to 30,500 level. That is your major resistance level. That is the biggest level in Bitcoin, the biggest by far level in Bitcoin. All right. And again, that's the key here to understand that that is your level. Real quick, the dollar absolutely plays into some major things here. Do we have a major drop in the dollar? And by the way, this is one of the reasons why I'm perplexed with Bitcoin and a little nervous about Bitcoin breaking out, is because here you had the dollar breaking some major support and Bitcoin should have been breaking to the upside. It hasn't done that yet. Doesn't mean it won't play catch up, but that is interesting to me. Upsloping trend line from 2021 through the pivot low here at 2023, right to this point, and then look at the breakdown that just occurred yesterday. All right, major wedge pattern breakdown. So that tells me, again, number one, it tells me that gold is going to be in good shape. Yeah, gold will pull back here and there, but ultimately gold probably goes higher. But also what's going on there with Bitcoin? Why isn't it breaking out? I mean, Ethereum's moving higher. Bitcoin so far is not. That's an interesting situation.
According to Soloway, the stock market is poised for a significant downturn, which could have far-reaching implications, including for the cryptocurrency sector. While recent bank runs have highlighted cryptocurrencies such as Bitcoin and precious metals like gold as alternative assets outside of the traditional banking system, Soloway argues that fear and emotions still outweigh these options. Despite facing persistent inflation, a banking crisis, and higher rates, the markets have shown resilience in recent times, with major averages on the rise. However, Soloway contends that the Federal Reserve should avoid cutting interest rates or pursuing further quantitative easing in its upcoming meeting, as such actions could exacerbate inflation and weaken the U.S. dollar. Instead, he suggests that the Fed should focus on tightening monetary policy to keep inflation under control.
Line is we're looking at, I think, a starting switch point where bad news means recession. And the recession is even worse this time because the Fed cannot cut rates and print money as aggressively as before. All right, let's get right into the charts. Here's the S&P 500 chart. Take a look, guys. And again, on the S&P 500, look at yesterday's high, right into a down sloping trend line. I love this stuff, guys. Again, this is what brings me into you guys every single day. Take a look at this. When we look right there, we look right here, and then look at this pivot point right there. Does it make sense that the markets opened higher on Tuesday yesterday and pulled back? The answer is, just from this chart, absolutely. The markets ran almost vertically into a brick wall this trend line being a brick wall. Now, remember, when you run into resistance, the general prognosis is a pullback. The question is, after you pull back, do you break out or do you break back down? All right, so there's two possibilities here. One is we consolidate in a bull flag where we start to do sideways consolidation. And this is really key, guys. A bull flag is noted by a 90 to 45 degree angle. Let me zoom in on myself because I want to show you guys this. All right, again, a bull flag is a general vertical move. Bull flag starts with the consolidation. It's either 90 degrees or it can be a slope of 45. Anywhere between 90 and 45 degrees, that is okay for a bull flag. That's what we're looking for here. Do we get that bull flag consolidation pattern, or do we just see a sharp pullback? In my personal opinion, I think the markets are very close to a major pivot. I've done calculations. I've looked at cycles. We're very, very close. Going into next week, we may see a sharp turn lower in the S&P 500.
Amid economic uncertainty, inflation, and a weaker dollar, gold prices are approaching all-time highs. This safe haven commodity is benefiting from several factors, leading experts to predict that gold prices could continue to rise and break records in 2023 and beyond. The price of gold experienced its biggest daily increase in 3 weeks, thanks to the US dollar's weakness and a technical breakout of the $2,000 resistance turn support level. If a gold price exceeds $2,050, it could draw attention to the previous yearly peak of about $2,070. With these factors in play, more investors may flock to gold as a safe investment, pushing up prices further. Soloway is optimistic about the precious metal's potential, predicting continued consolidation with an initial target of $2,075. Soloway sees gold as a hedge against the uncertainty in the global economy, supporting his bullish outlook.
Gold staging another up move today. This is real-time action on gold right here. Another green candle. Look at the flag pattern breakout, guys. Again, flag. Look at that pretty flag. Here's your flag pole. And this is what I talk about in flags, right? So look at the angles of this. It's a sideways consolidation that's generally 45 to 90 degrees. And again, it forms this sideways chop. That's consolidation or digestion of the recent up move. That's very, very bullish. Notice how it happened above this down sloping trend line. Pivot high right here, right? Pivot high right here. And then here we broke out, we retraced, we consolidated. Now we're breaking out. Where's your short-term target? Right up here. So you're looking at 2075, 2080 double top. It actually would be a triple top. Now, I saw someone asking this question earlier, guys. And again, I do my best to answer a couple questions here and there. I just have to get through what I want to get to you guys ASAP. Someone asked, how much of a pullback would we expect on gold at the double, the triple top? That's a great question. To figure that out, what we want to do here is we want to look at the chart. So basically what you have here, all right, is sideways consolidation. In fact, let me just go to this. All right, so here's your double top right up here. And let's say we go straight up there. The essence of the pullback should bring us back to that former pivot high and consolidation. So you would put a line here in at around 1960. And if we hit this level, let me draw a trend line here so you guys get this. So if we go up here, you should get a pullback here to about this 1960-65 level. You also have the down sloping line, but less likely will go there. The bottom line is we recheck back to this pivot high, all this consolidation, and that becomes your buying opportunity for the next leg up. Off to the races we go. I am now isolating down about a $2,300 price target on gold by year end. I think, again, I've showed you guys this in the past, and I think it's remarkable. But if you go to the 1970s, you had a 9x on gold from the lows of the consolidation. Now, we're not going to do 19x. Let's not get fooled by that. All right, 9x was in a world without Bitcoin, without a lot of alternatives for investments. Do I think we can do a 3x? Yes. Do I think we're going north of 5,000 over the next couple years? I absolutely do on gold.
Soloway has expressed concern about the impact of the Federal Reserve's monetary policies on various asset classes, including the stock market. He has warned of the potential for inflation to rise and doubts the Fed's ability to manage it effectively. Soloway recognizes the significant impact that the central bank's policies can have on the economy, and he is closely monitoring the situation. On this note, we conclude today's video. Do you agree with Gareth Soloway's perspective about ongoing market crisis, rising inflation, and Bitcoin performance in current crisis? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.